and I'll request all of you, once this video is uploaded in the YouTube, please share with your friends and view it couple of times. So it is slightly complex instrument, slightly complex. It has its own benefits, drawbacks, as well as it is having a wonderful opportunity. If you think in terms of opportunity, it gives you a wonderful opportunity. So think a while, if in India you are sitting with lesser risk. So now if you wish to trade in the Nifty future in India, 75 is the lot size. If you take 25,000 is the base price of 25,400 and odd, your contract size is going to 15 lakhs. 15 to 20 lakhs risk you are carrying. Hardly how much you are earning, 5,000, 6,000, 10,000, whatever may be. It may not, it will never come to the lakhs. It will come in thousands. However, if I say you just take some risk of only 20,000, 20k, and so if I say you just take a risk of 20k, and if this 20k gives you 1,000 to 2,000 bucks, which is better? This 20,000 risk with 1 to 2,000 rupees is better, or by taking 15 lakhs risk to earning 7 to 8,000 rupees is better. So that benefit it has. So tax clarity is already there. So nothing to worry about the taxations. Taxations, they made it 30% you have to pay on virtual digital asset. Same thing is applicable here. So if you are doing F&O trade also, you are paying the same 30% tax. So taxation part, it is very clear. And your earning will come in the USDT, Tether. So Tether is not dollar. Tether is a ledger, so it will always have a incremented value. So all these things, benefits will be there. So I'll start the session for the day. Once again, good evening to all of you. And again, I'll request please view this recordings time and again. And those who are not joined our GAN Trader group, Telegram group, please participate. So all the alerts we are giving here. So quite interesting things is the crypto domain. So first we'll understand about the crypto future. So in Hindi, the same subject video already I have released today in our YouTube. You can see that. So today's session will be in English. However, the same concepts Hindi version I have already released in a recorded format, so that you will get it here how to use that same presentation, and same thing I have released it again. So fine. So we'll move to the first part of our understanding the crypto future. So crypto futures are known as perpetual contract. Perpetual. So it is not perpetual contract. So it is not a fake contract. So whatever we are doing in the Indian market, stock or index, this is called as a shadow contract or a fake contract, or it is a, there is no asset backing for that. So there is a, if net asset is there, so they allow some 80-90% of the asset can be taken. So here it is perpetual contract, means it is like the spot. So what is the difference in the perpetual contract? It doesn't have any expiry date. So perpetual contract, you can buy the things in a future by paying specific margins and all. It will not have any expiry. It will not have daily M2M deductions. Like in our market, what happens if Nifty you bought 100% goes down, so your M2M will be deducted next day morning. So these perpetual contracts will not have any deduction in the M2M. It will not have expiry. So technically, once these two things are gone, expiry is not there, M2M deductions per day basis it is not there, or every day basis it is not there. So that is, say that it doesn't have a cost of carry. So zero cost of carry. Cost of carry is zero. So this is what the crypto futures are meant for. So it is a perpetual contract having no expiry. And is it having a complete asset backing? Means if you are trading in future, you are also trading in the spot only. It is a spot market only you are trading because it doesn't have a expiry. So perpetual contract, say here it is written perpetual, PERPETUAL, perpetual. All futures whatever you will see, it will be written perpetual. So that means it doesn't have a expiry. So means there is no cost of carry. So no death of the contract and again a reborn of the contract. So it is a permanent contract. So no M2M deductions. So that is not there. So whenever you are doing a trade in the crypto future, three costs you have to understand. One is maker fee, second is the taker fee. So here I am just making it as a circling it out. Third is the funding fee. This funding fee can go to positive, it can be negative also. So whenever you are buying a future, if you are a future buyer, that means you are giving liquidity to the market. So you are putting a buy order. So buy order means you are providing liquidity. You are a liquidity giver. So you will be getting this maker fee. By buying a thing, you are getting the maker fee. Who is paying you this maker fee? The seller is paying you the maker fee, that is known as taker fee. So seller is taking out the liquidity, so he is paying you the taker fee, and you are buying, so you are providing the liquidity, so you are getting the maker fee. So always in the market, maker fee will be less than the taker fee. So you are putting a buy order of Ethereum, say, so you are eligible to get 0.024% of your trade value as a maker fee, and the person who is selling you, he will be selling that, paying you the taker fee. So here 1-to-1. So whenever it is a blockchain technology, so anybody, whoever is selling you here, if you are a buyer, so person who is selling, that particular person will be paying the taker fee. And the person who is buying, he will buy the stock, buy the Ethereum, he will also receive a maker fee. Hence, his cost of ownership will come down. Suppose if he is putting this 3353 as a order, and this buy order is getting executed, his actual cost will come 3353 minus 0.024 percentage of 3353. So you will be getting, whenever you are buying a future, you are getting at a somewhat lesser price. With this maker fee, you will be receiving from the seller. So seller is paying more, you are getting less, then who is taking them in between things? So here, taker fee, the person who is paying you, he is paying 0.065%. You are getting only 0.024%. So who is taking 0.041%? That is the platform. The broker is taking that as a brokerage. So there is no brokerage. So that is the brokerage income for the broker. So you bought a contract is written in your name. So now this is a long contract, this is a short contract, you are seeing both the contracts are present. Then coming to the funding fee. So every coin, so whatever the futures are available, you can see that there is a funding rate. Everything is having a funding rate. 0.0084%, 0023%, 0068%. This is also negative here. So this funding fee is going to be debited for holding this contract. Since it is a perpetual contract, if you are a buyer and funding fee is positive, if this is a positive and you are a buyer, so every 8-hour interval, so every day is being splitted into, it is a 24-hour market. So every day is being splitted into 3 segments. 24 by 3, so it is 8 hours. Every 8 hours, one small fee will be paid by the buyer. That is funding fee. If you are a seller, you will be receiving this funding fee. If you are selling a future, you will be receiving this particular funding fee. And if you are a buyer, you will be paying this funding fee. What interval? 8 hours interval. So if you just go to here, if you just go to these things, if I go to the transactions here, you can see here the funding fee. So Ethereum I have bought. So this is the funding fee I have paid at 1 o'clock 33 minutes. Same time, Bitcoin I sold. So I am receiving the funding fee of 0.0545 tethers. So, and I am having one more future long also, for that I am paying. So every 8 hours interval, this credit and debit are happening to my account. So this is 3 things you have to understand: funding fee, maker fee, taker fee. How much funding fee will go? So that is why this funding fee is introduced, so that the premium, so spot and future will maintain, rebalance their premium, that a cost of carry will be always 0, and this funding fee will be globally set, not locally by one exchange. Globally it will be set. So there are specific formulas for calculating that funding fee. It will be automatically, the data will be global exchange, whatever the exchanges are linked to this, all data will be going to in a blockchain. From there it will be real time basis, it will be calculated. So this is fixed for first this 8 hours. After this 8 hours, this funding fee also will change. So here all this you are seeing negative funding fee. Negative funding fee means the buyer will be receiving this fee. Positive funding fee means the buyer will be giving the funding fee. So funding fee is being introduced just to stop the excessive hoarding by the people. As long as you want, Ramkumar ji, if you want to hold the future for 10 years also, you are allowed. You can hold for 10 years. But every 8 hours you have to pay the funding fee. So the cost you have to pay for that. So every 8 hours the cost will be deducted from your account, and this funding fee will be deducted and given to whom? Person who has sold you. So funding fee for a buyer, it should be deducted and immediately it should be credited to the seller. So similar way, if the funding fee is negative, this funding fee is negative you are seeing, that means the person who sold this asset, so this asset is at 20% down. So what happens? Somebody sold it. They're thinking that okay, another 5% also it will go down, or 10% it will go down. So this asset is already down. So what happens if you sell this asset? Means more short position if it is getting created. What happens? The short seller has to pay 1.31% to the buyer of this asset. Anybody is buying this asset, he will keep on earning this 1.31% in every 8 hour interval, but it will change. So this sequence of 1 hour, after 1 hour, this funding fee will change. So what happens here? Somebody is selling and going to hammer that stock coin very badly, is going to pay back. So in 24 hour, if that same person is holding that, so in 24 hour itself, 3.9% they have to pay. So if now further 19% down, if he is further selling that, 3.9% he has to pay to the buyer. So that also somehow controls the behavior of buyers and the sellers. So this funding fee, irrespective positional. Suppose if you are holding, now you are entering this one, if you are buying this one. So already 8 hours, 7 hours is gone, 1 hour is left. So For 1 hour, whatever funding fee is coming to you, you as a buyer will get for 1 hour. So next, once this 1 hour is over, the funding fee will get reset. So it may be 1.31%, it may be reduced, it may be increasing. So anything can happen. So what happens whenever the funding fee, any coin's price fall very drastically down, that time funding fee will be more, so which will discourage the sellers. Same time, whenever one coin goes very high, that time also funding fee will be very high, so that it will discourage the buyers. So that is how this mechanism works. So some people used to earn from this one also, from this funding fee itself they earn. So here you can say that one coin is 10% off, but its funding fee is negative. Here, new coin, funding fee is negative. So here, if you are buying, the person who is selling this one, he has to pay you funding fee. So this based on the overall demand and supply available in the network, so they will define it. So this is what you have understood. Now move to the next part. So this crypto market, you found out that this is how the future is having different instruments. And here I am going to tell you how you will use our volatility concept in the crypto analysis. So 2-3 challenges are here. So whenever we use this same concept in stock or future, there is a lean period. There is no trade period is there. But this is a 24-hour market. First challenge is this. Second challenge what we are having, mostly I have told you in my earlier videos, you will say that mostly we found out the 15, 20%, 30%, very rarely 40% volatility per annum. However, in crypto market, 40% volatility will be the lowest. Highest it goes to 93%, 94%. So it is very highly volatile market. So here how we should use that techniques, that I am going to tell you. And here what is the benefit, risk, everything we'll see. So here to use the volatility, small tweakings you have to do. You have to calculate the volatility from past 10 days data. But out of the 10 days data, 9 data are closing data, but the 10th data will be the current price, because it is a very continuous data. So what kind of data it is, because there is no close here. So 24-hour market. So you can notationally close, okay, this day is getting over at 12 o'clock midnight. But that is not the closing, because midnight for you, it is the closing for this 26th of December. But for the market, the trade is happening, the price is continuing. It is a continuous data. So by nature, crypto price is continuous, discrete, random, high frequency data. So it is a very complicated data. That continuity is there. For that, the 9th day, 9 old data will take, 1 current price will take. Then we will derive the price range, daily volatility and price range. I will demonstrate in Excel. Out of this price range, whatever we are finding out, I will be taking 1/3 of that. Why 1/3? Why not full price range? Because this volatility is too huge. So if that same volatility continues, so whenever you have a huge thing, too big, so it has 2 probability. Either it will reduce or it will maintain the same. If it is low, too low, it has the chances to grow up or it has to remain low. But if it is too high, it has 2 probabilities. Either it has to fall down or it will remain same. So for that, if I take a smaller price share or one fragment of the price, then my analysis will come correct. So for that reason, 1/3 of the price range I am taking. That price range you are multiplying with the Fibonacci ratios, and whatever the factors you are getting, that you are adding with the 10th day data, which is the last price or current price, to get the resistance, subtract those Fibonacci ratio price point to get the supports. And buy sell will be happening at 0.236 to 0.382. So what happens here? Trade style also I'll tell you how you should trade. So here, sweet in taste. Okay, but saccharin is too sweet in taste. So one drop is enough to make a sweet drink for 25 liters, hardly 1 ml. However, to make a 25 liters of sweet drink, you require 2 kilos of sugar. That means you have to treat the volatility in that same way. So I'll just go to the Excel. So this is what the Bitcoin analysis I am going to do. It is a continuous data. So whatever happened till 25th, it is over. So from where you will get the data? So you will just have a web search here. Suppose if you are going for a web search, Bitcoin historical data. If you go for the Bitcoin historical data, two sources you will get, investing as well as coin market cap. Both are authentic source. If you are going for this Bitcoin investing.com, so what happens? By 25th it has a data, current data also, 26th data will be popping up. This is the last traded price now. Now currently it is happening. So 95,362.7. So I will be making it 95,362.7. So this is what the Bitcoin currently trading. So this is for 25th. After that, this one. So if you see that 25th, 99,391.3. So midnight 25th, this was the data. Current data is this one. So based on this current data, whenever we are finding out the volatility, this volatility is presenting 51%. Annual volatility 51%. Too huge. Daily volatility coming around to 0.0271%. So if you multiply with 100, you will get 2.71%. 2.71% daily volatility. It's too huge. And this prices is in the dollar terms because you are going to earn in dollar. They are not trading in rupee. So all crypto futures will trade in dollar. Your earnings also will be in dollar. In India, even earning $2 or $5 per day, that itself is a great thing. Okay, so this is also not dollar. This is known as a tether. Tether is a digital dollar. So its value will be different. So whenever you are considering tether, tether is not your dollar. Dollar is 85 means tether will be 1994 or something. So tether, if you go here, tether is 93.22. It is a ledger. So what is a ledger and all, if time permits, I will tell you. So here the data we have taken, analyzed, it is this thing. Then the price range, whatever the price range we got from, by multiplying this daily volatility along with this last price, 1/3 of that price I am taking. So 1/3 of the price comes to 863.85 USDT. So I am multiplying all Fibonacci ratio with that. So here I am, if I am multiplying 0.236, I am getting 203.87. If I am multiplying 0.382, I am getting 329.99. So likewise, I am getting all these values by multiplying, just multiplying this price range with the Fibonacci ratios. Then I am adding and subtracting from the same value, 95,362.7, which was my value. With that value, I am adding, and from that value itself, I am subtracting. So by this process, all my calculations are over. So after these calculations are over, it is a highly volatile market. So my buy zone is here, 95,566 to 95,693. Once the price crosses above this, and wait for some time, let it come to this range, or in between this range you can buy. Same way, if the price falls to this range, 95,159 to 95,032, this is your selling zone. Any price below 95,159, above 95,032, you should sell. And this calculation will be valid for 1 to 2 hours. Why 1 to 2 hours? Because it is a highly volatile instrument. So for stock market, we are telling that it is valid for a day. It is not valid for a day. The volatility, you imagine, it is near to $1 lakh, one coin price. So it is, volatility is too huge. So for that, it is only 1 to 2 hours. Within 1 or 2 hours, you will either get target or stop loss hit. So if you are buying here in this zone, 95,159, this will be your stop loss. And these are your targets, mostly 0.618 targets. Once it penetrates, it goes to the 0.786, and very frequently from our past 5-10 days, we have seen 1.618 very frequently it visits, very frequently. If you get a trend breakout happens in upside or downside, within 1 or 2 hours, you are going to get the final target. So this is what you have to do using the volatility principle. Now come to the trading style, which is important. Nowadays, what we people are doing in the stock market, you have 50,000, you are taking a leverage, huge leverage you are taking, and then you are going on trading this thing. So here you can say, just now we have put it 362. Now this is trading at 349. So let us see wherever the direction it goes during our discussion phase. If it gives a breakout, we can see. And if you see, same thing I have done for the Ethereum here, and Ethereum also we are testing from the past couple of days. It has a great promising result. So 3339.28, 3339.40. So 339.40. So this is the Ethereum. This is the buy sell targets. So take a photograph of this so that you will know by tomorrow, once the market ends, when your sleep breaks tomorrow morning, have a look at the price, whether these prices happened or not, you can able to know. And these charts, data, everything is free. You can get it from the public domain free. So it is a blockchain technology, decentralized technology. Nobody controls that. So few minutes back, I have just told you one simple thing. You have 2 substances to sweeten a drink. So you have 15 liter of water. So this 15 liter of water, you are making one sweet drink you are preparing, or you are making a sarbat, or you are making a lassi, anything you can say. This 15 liter of water what you are having, to sweeten this you may require 2 kilo sugar. 2 kilos sugar if you put, it will sweeten. Or there is a substance called saccharin. So this is also a chemical. Few drops, if you put 1 milliliter of liquid in this water, it will sweeten the entire 15 liter of water will become sweet water. So if you are trading in Nifty, you are taking a 15 lakhs risk. Whether you are hedging, not hedging, that doesn't matter. But its volatility is 10%. But if you look into this Ethereum, what is the volatility? You will get surprised here. What is the volatility of Ethereum? Have a look here. 71%. And none of the cryptocurrency will have less than 40% or 50%. Very rare you will get. Most of the prominent cryptocurrencies, you will get 70%, 60%, 50%, that kind of volatility. That means if I am trading 1 lakh worth of Nifty, 1 lakh worth of Nifty, considering the Nifty volatility as 10%, if I want to trade in Ethereum, so 1 divided by 7, if I make it, so hardly 15 or 14.9k, 14.9k worth of Ethereum if I can trade, it will have the same result. Because 1 lakh if you trade with a 10% volatility, whatever the profit you will earn here, by trading with 14.9k, 1/7 of that, you are going to get the same result. same profit, because volatility is high. So there is no point of taking the leverage. So here, if you are trading, your lesser amount of the trade also can give you the same profit. Suppose Nifty, if you are trading at 15 lakhs worth of things, you can divide it by 7. 2.5 lakhs worth of position, if you take in the Ethereum, you will get the same result. Same profit will come. So volatility having a greater value here. So when the instrument is having a very high volatility, it is better to take lesser exposure. So based on the trend breakout, you can take lesser exposure, the result will be same. The profitability will be same. So your base employed capital will reduce. Second factor, in stock market, what happens? Who decides the lot? So today night, SEBI got a dream. SEBI got a dream. You make all contract 200 crores will be the minimum. Anybody wants to do Nifty trade, one lot you should increase in such a way that it should be 200 crores. That is what they did one few months back. One wrong instrument, weekly options, they introduced. So that weekly instrument was got exploited like anything. And I have shown you people all, those who have joined the last program, I have shown you that how the FI buy sell data in the futures and options market was getting exploited for entire 1 year. Entire 1 year. I have shown you this. So see these figures from 2024 September 2023 September, they have started exploiting to few lakhs crore, they have started selling. And once these restrictions came into picture, they are gone. So that was a wrong exotic options they have introduced here, which has no basis, which has no theory, nothing. Exotic option. So exotic option with a non-exotic underlying asset. So that create a havoc. Then instead of phasing out that instrument completely, partially they phased out. Completely instead of phasing out that instrument, they increase the lot size. So level playing field is gone. So they are going to kill all the brokers. So earlier also your Nifty was having 5 lakhs, 7 lakhs lot size, nothing was happening. Before the weekly contract, nothing was happening. The same Nifty with the same size, stock option with the same size, market was running smoothly for multiple years. So here, that is why I told you, if they get a dream in the night that you make all contracts as 200 crores, they will make it. So what happens there? The participation they want to reduce. Why they are reducing participation? Definitely something is there. So there is a big industry, mutual fund industry is sitting, which is telling that lot of flow is coming, you put restrictions, so people will be compelled to come to us. They will have no other choice. So we will take all expenses, creams will take whatever throwaway things we will give, they will be happy with that. So we don't want the fintech to increase here. We don't want people to involve in the market with their own personal capacity by learning, by educating, by doing anything. So that is what vested interest is there. So I have shown you the proof here. See, few lakhs crore that is suddenly started from September 2023, and once these restrictions came into effect, only in August there is a 2 lakhs crore that to buying for closing and all. So all suddenly they disappear. 52,000, 85, 35, another couple of months you will say it will come to less than 10,000 crore or 15,000 crore. Yes, there is no point to exploit. So all these algo fellows are gone. Higher taxations has come. But who in return suffer? The government's earning through this has suffered. There is a long narration is being created. Only 20-30% people makes money. Others lose. Where is that count? Who are that? Put that list. So nothing is there. Yes, losers are there. Losers will be always there in the market because Their ignorance is the cause of losing. So they do not know how to handle the volatility. So here you can handle the volatility. Number one thing. Second factor here you have to come. Here the lot size is starting with only $66. So here the instrument is trading at what? 3,332 rupees. But your lot size in a fraction of 0.02, which comes only $67. So see, the one instrument, one coin cost 3,334 USDT, but you are entering at a very smaller quantity, $66. That is what you can enter. So if instrument is more volatile, so if you take lesser exposure in the trade, it is better. There is no need of leverage, though they allow on 25x leverage, but don't take leverage. Take some 5x, 2x, 3x, even zero leverage. Also, I have taken some positions in zero leverage. You have seen 1x means whatever is your money, you give it and take the position. So similar way, you can initiate the positions with a smaller amount, because it has a higher volatility. It is going to give you the same result. So if you are taking 66, means it is, you can say 70 USDT order here, it is equivalent to 70 into 7, means 490 worth USDT, and 1 USDT is 94 rupees. So it is equivalent to 490 USDT position in the Nifty. So that kind of same profit, if you take Nifty 490 USDT worth of order, 70 USDT will give you the same profit. Taxes are same, profit same. It is regulated through funding cost, so no hoarding can happen, no excessive sale can happen. Liquidity will be managed there. Since maker fee, taker fee is there, that is also bypass all your STT, nothing is there. But the main catch is funding fee. So this controls, and it is variable quantity. It will vary every 8 hours. It will become negative, it will become positive, it will become too much negative, too much positive. So it will, in case of a huge fall, it will control. In case of a huge rally, it will control. So that is where you have to play. And second factor, most important factor, what I observe here, whenever you are using the volatility concept here, whatever result will come within 1 to 2 hours itself, you will be getting that. So if you enter at 3349, your 3405 will come within 2 hours, or your stop loss of 3329 will happen within 2 hours. So it may not go beyond 2 hours. So how to enter? You have to see for this countdown to get over. This has to get over. This has to come to a fresh cycle. Then you enter. So this is good, or taking a huge position in the Nifty, it is good. So those who are trading in, say, multiple crores, so 5 crore open position is there, 10 crore open position is there. So if they will take 1/7 of that, 1/10 of that, 1 crore open position, if they can initiate here, result is same. And many of you will be seeing that, those who have joined my earlier programs and all, those who have already learned our beta decoupling methods and all. See, 2 lots, 3 lot, we are taking a exposure of near to 1 crore, and finally landing off in few thousands of profit. 1/7 of that things, if we can take in the beta decoupling, which I have taken here, only 1/7 of that. Here it is near to, you can say, $780, and here $630 or $660 of sell. So this is means 0.008, you have to multiply with this value, and here 0.20 should be multiplied with my entry here, my average entry here. If you multiply that, you will know that how much is there. Hardly some $50 to $60 exposure is there. but it has the same impact. Same impact like having a small beta decoupling trade in one lot of Nifty and Bank Nifty. You have any question? So it's a part of your intraday activities to here. Taxes is same. With lesser exposure, you will get the same benefit. You will earn in dollars. So three advantages are there. And every platform also having a limit. You cannot take 5 crore, 10 crore positions and all. They are restricted. So what is the risk here? So when we talk about the risk and benefit, benefit is 24-hour market, high volatility, hence target and stop loss will happen quickly. Perpetual contract, no rollover cost, cost of carry, nothing. Profit will be in USDT. Minimum lot size is small as compared to stock and index future. So it is lot size is very small, and high leverage is there. If you want, you can use. Drawbacks, it is an unregulated market. If you go into a wrong exchange, your money is gone. That fraud may happen. Perpetual contract, so holding cost will be high. So if you hold for 15 days, 20 days, your cost of holding will be high. And future involves three expenses: maker fee, taker fee, funding fee. So this is a funding fee is a continuous affair. Every 8 hours it will be a taxing on you if you are long only. So higher volatility instrument, if trade without proper discipline or risk management, it will lead in uncontrolled loss. Since it is a volatility is very high, if you say that no, Nifty also I am handling 50 crore position, here also I will take 50 crore, then you are finished. You should not take that. You should reduce. If you are 50 crore position you are handling in Nifty, here 5 crore only will give you the same result. So you be satisfied with the 5 crore. You reduce, you should not increase. Certain contracts are illiquid, so better see the liquidity before entering. What you have learned. And in the smart finance domain, always we come with new things. So our crypto product is now almost come into the existence. And this particular product, initially we have just added few tools into that. Few tools we have added initially into that. And this particular product, desktop edition, and because initially we have attempted, because of some regulatory hurdles and other things, we stopped it. And now using the same concept, we have come into existence with the GAN study. So including the GAN study, all GAN studies, this particular product is going to be get released this week itself. You can say how many buys, how many sales, how many are neutral studies. So I am going for the Bitcoin studies. You can use the GAN angle and volatility method, midpoint method, square of 9, square of 12, hexagon. So all methods, GAN methods are being added. Natural constant will be added. All other methods also will be added. Volatility study also will be added. Whatever we are having in the stocks domain, same thing will be added, including the pair trade. So pair trade also will be added. So we are into the testing phase for the pair trade. So these things are ready, and hardly by next week, once new year starts, maybe in the January 2025, this will be our first product on crypto. So by January 2025, the first product on crypto he will be getting. And in GAN's method, it gives wonderful success. Volatility method, what I have explained to you, it gives wonderful success. Only thing what you have to do, you have to be highly disciplined to handle this thing. So it is now 3349. The moment we have been discussing, now 3349 uptrend has come in front of you. 3349. So you can say 47, 48, 49. It is coming. 3349 also touched very quickly, and it will touch further also. You can say 47, 48, 49. It is coming. So buy trend has given a breakout now. So once the buy trend is giving a breakout, we are expecting quickly 3364.83. 3364.83 quickly we will be expecting on the Ethereum. So with an $60, see, it has given the uptrend breakout. If you just wait for 10 minutes, you can get that 3363 also will come. 3363 also will come within 10 minutes. If you just wait for 10 minutes, that 3363 first targets also you will achieve, because it is having a 70% of volatility. And similar way also stop loss will hit. Don't think that only target will come. So if you take a huge position, stop loss hitting also will have the similar impact. So for that, lower leverage, lower exposure should be taken in this, because it effect is same. So like sugar and saccharin, you have to consider this thing as a saccharin. It is not sugar. So sugar and saccharin, so you have to, so yes, liquidity of this first 5-10 counters will have good liquidity. So liquidity is here. What is the traded volume? 9.5 billion, 2.78 billions. In this billions it is trading. Solana also 1.11 billion. So all are billion, million things it is trading. However, certain counters will have only few thousands. So this is a thing, morning it was 75, now it is 88. So these are the counters you must avoid. You should not toss that at all. So the prime 4-5 counters is enough, because this entire market cap of crypto industry is 3.3 trillion. It is very, very small, very, very small as compared to US stock market. This is also a Delta exchange also. One exchange is there. If you see the current market cap, it is 3.31 trillion. The market cap of the entire crypto industry is 3.31 trillion. But US Nasdaq's first 10 companies is having near to 27 trillion market cap. Dow 30 index is having near to 45 trillions of market cap. So out of this 3.31 trillion, 1.9 trillion goes for Bitcoin only, 1.9 trillion. And this is having 0.4 trillion. So 2.3 is gone, remaining 1 trillion is belongs to all others. So if that kind of market capitalization is there, so best two things will be for the trading, or best 5 coins you can choose for the trading, which will have enough liquidity, which will have enough volatility, and which can award you good profit also. So 56 has happened. 63 we are, 66 we are expecting. How much we are expecting? 64.83. Means 65 we are expecting within 5 minutes itself. I told you, whenever it gives a trend breakout, quickest time it will hit your 0.618 target. So 0.618 target, after it will be little slow. It will slow 0.786 if it hits, then quickly it will hit the 1.618. If it crosses 0.786 within 5 minutes itself, you will get that it will hit the 1.618. So see, this is the toxic nature of this, or this is the wild nature of this particular price actions. If that kind of wild nature is there, so you should treat it as a saccharin. With the smaller things you can take. Suppose if you are $60-70, if you are, so position was $66 if you take, or $70 if you are taking, and just earning $1 or $0.5. Forget about $1, $0.5 also if you are earning in one trade, that itself is enough. That itself is enough. Because this is the hardly 5,000 to 6,000 rupees thing you are taking. You are getting another 90-100 rupees, 4 to 5 trades if you do itself, it is good. So for this is $66,000, $66, only $6 you require for investment. This is the margin is required. Only 500 rupees you are taking and getting 50 rupees. That itself is a great thing. So you can see here, all this price point is changing here. In the group also I can, those who are joined this particular program, I will be Sunday or Saturday, I am demonstrating how much we are going to make out of this particular trade. Anybody has any other query can ask. Your trade risk in the index and stocks has increased multifold, And not only that, hedging cost also will increase because of less liquidity in the Nifty, Bank Nifty and all. As contract size increase, so liquidity will definitely shrink. So that part will be there. Higher taxations and very strong wind for controlling the retail participation to promote a specific group of industry. So for that, it is better to curtail the positions there. A similar things with a lesser risk you can earn here. It is going to be get regulated. It is a presidential commitment in US. So it is going to be get regulated. Taxation part is clear. And the recent development also you would have seen crypto taxations. Some court judgments also has come. It is also being normalized, or it is being considered as a business, general business. So regulations will come. So these regulations will be healthy for crypto industry. So for that only the crypto prices nowadays going up. You should start fast in the platform. You have to put some money, Indian money. Suppose 10,000 rupees you put in the Indian money in any of your broking platform, either CoinSwitch or Delta Exchange or Binance. I'll say that Binance and all also big companies, you be with them. That is better. CoinSwitch also good. So here after doing that, you have to buy some Tether. So this Tether you have to buy. So whatever the price it is trading. So 10,000. If you are putting 10,000, it will be divided by 94. Whatever the Tether you will get. So 100 Tethers you will get, or 105 Tethers you will get. So once you get the Tether, so you have to go for the future. And they are also not allowing just like that. They will take an exam. One online exam, 10-20 questions they will ask you. By 10 questions they will ask you on future trading, what is a future contract and other things, whatever the things I have told you. So you have to qualify in that. 5-10 answers you have to give correctly. Then this feature they will enable. They want to know whether you know the concept of future trading or not. So just 4 to 5 questions, multiple choice will be there. So you have to tick the choice, and now you qualify. So now once you qualify, you have 105 Tether. So if you want 0.02 quantity of Ethereum you can buy. If you want the Bitcoin, so 5 to 6. So Bitcoin, if you take it $192, you require some margins here. So $192 you require some amount of margin. So 30-40 USD you require. So this is how you have to trade. This is what you have to. Advanced strategies 3 to 4 days. Response time for intraday activities is 2 to 3 hours. So you can save a lot of time. You can have lesser exposure, and your earning also will be the same as here. Taxation is same. So why to stick to one market? Stick to multiple market. Even though I can say that with all this, that minute exposures, I can say that it is better than your commodity market, better than your stock and index market. Much better. In current form itself, it is much better.